Hello everyone. Wish you all a very happy new year. I hope the first week has been good for you. I also hope that you saw the video that we put out on what happened in 2023, the key developments that we saw at macro and market level. What we are doing now is kind of giving out what we think probably would happen in 2024. I must say that it's all guesstimates based on data that we analyze based on incoming information. We cannot obviously predict what is exactly going to happen. I wish I could, but it's more a sense of what we could expect in this year. Let me start with macro as usual, because that's a backdrop for everything that happens in markets and investments. Now, I'll split macro into two parts. One is the India macro, looking very good, to be honest. I'm actually very surprised when I see so many data now, that a lot of data is coming to good numbers in terms of trend, in terms of resilience. I believe Reserve Bank of India has done a fabulous job of maintaining interest rates steady. Obviously, it has been helped from macro factors like steady oil prices, steady food prices, good monsoon that we saw last year. All of this has made sure that the inflation was really steady in 2023. Now, steady interest rates and a vision of Reserve Bank of India to keep the interest rates as stable as possible creates CAPEX, capital expenditure as we call it. Please understand that a large part of CAPEX is still borrowed. When companies and governments go into high capital expenditure, they tend to borrow money at a certain interest rates. If they are fairly sure that interest rates are not going to go up a lot, it gives them the confidence to go and borrow and spend a lot more on CAPEX. So both the public spending on CAPEX as well as the private CAPEX has been very high. What India has benefited a lot, and I've said this multiple times in the last 1 year, is the China plus one story. The entire manufacturing in various sectors, India has benefited because of China plus one. So the global manufacturing demand has kind of gone out of China and come into countries including India. You can see multiple sectors like chemicals, auto, pharma components, defense. All these sectors have benefited a lot from China plus one. And what we have seen is the capacity utilization of all these sectors have increased significantly over the last 4 to 5 years. In fact, in some of these sectors, the capacity utilization is actually above par, which means that without further capex to increase capacity, they would not be able to actually produce much. And that's what you will see now. I think going forward, the private capex is going to go up. You will see private companies continuously borrowing and doing more capex, which is good for the overall GDP. So the macro story of India looks very, very good. Now, obviously, the most important theme of 2024 is going to be union elections that we're going to see. Comes every 5 years, as you know. A lot of vote bank politics gets played around this part. We are now also getting to see the possible third term of the BJP government coming in. There is a lot of state election results that we saw recently, and I must say that most of the results and data and whatever we hear from the media plus on the ground realities, it seems that BJP probably is going to come back to power. We might see the number of seats that they win as a single party probably reducing, but the chances that there will be a political upset seems very low as of now. If it happens, make no mistake, that is going to be the biggest impactful event for the market if BJP doesn't come back to power. Why I'm saying BJP looks strong at this point in time is largely because of the policy decisions they have taken. The popularity rating for Narendra Modi ji as a Prime Minister has been strong as of now. But most importantly, the opposition seems still very weak and disintegrated. We have a large coalition, but we still don't have a consensus on the seat sharing. We don't have a consensus on who's going to be the prime ministerial candidate from that side. So as long as there is no strong opposition, I think BJP will come back to power. I'm not much of a political analyst, but what it means for the market is steady policies, continuation of whatever they have been doing over the last 10 years, which is generally very good for the markets. Now, it's very interesting to see the past and look at what happens to equity markets during election years. If you've seen 2014 election, 2009, 2004, before that, any election that you consider, you can actually break down the election impact on markets into two parts. One is everything that happened till 90s. Politics used to be much more volatile at that point in time, and markets used to be much more smaller in terms of market size and activity, largely institutional, not much of retail participation. But if you look at the last 2 or 3 elections, probably you will see the more stronger correlation that you will expect this time also. Anytime you go into election with an expectation that the ruling party will continue, the market tends to not react much after the election results. You will not see a breakthrough rally just because BJP comes back to power, because to be honest, that is already priced in the market. After the recent state elections where BJP did really well, most investors, institutional and retail, is going into election saying we are going to bring BJP back into power, which essentially means that the entire rally that you see is already priced in. I wouldn't in that scenario expect a major rally after that. However, for whatever reason, if BJP doesn't come back to power, or if there is a hung parliament where we don't have a clear majority, make no mistake, market will correct significantly post that.